Hey everyone, welcome back to Corporate Decoder, the place where we shine a spotlight on the financial nitty-gritty behind big business. And, sometimes that spotlight can be harsher than a Texas summer sun. Today we're diving into Range Resources Corporation's latest quarterly report. Get ready because this one's got some interesting twists and turns that really tell a story about how a major energy company is navigating the ups and downs of the market. And if you like getting these kinds of broken down insights so you're not left scratching your head after reading these dense filings, make sure you subscribe and hit that notification bell. Also, we have a great community over on Discord, so join us there. The link is in the description below. So this is a normal quarterly report, a 10Q, and it gives us a snapshot of the company's financial health for the period ending June 30, 2025. Think of it like a checkup for the company's finances. Let's immediately jump into their financial picture. Here on the balance sheet, we see a detailed look at what Range owns and what it owes. One of the first things that jumps out is their cash position. At the end of June 2025, they had just $134,000 in cash. Now that might sound low, but look at the end of the prior year, it was over $4 million. This big drop tells us they are actively using their cash, likely for investments or paying down debt, which we'll get to later. Their main assets are their natural gas and oil properties, which are valued at nearly $6.5 billion. This is their core business. Clearly, their physical assets are massive. Looking at what they owe in the short term, their total current liabilities are almost $583 million. This is down significantly from over $1.2 billion at the end of 2024. This reduction is a really good sign. A big part of that decrease comes from dealing with their short-term debt. They had over $608 million in long-term debt due within a year at the end of 2024, but now it's zero. That means they've paid off some big chunks of debt, which is usually good for financial health. Their total stockholders' equity is about $4.1 billion. This is the book value of what the owners, the stockholders, actually own. Now let's talk about how much money they made and spent. This is the income statement, and it's where we see the results of their operations. For the 3 months ending June 30, 2025, they reported a net income of nearly $238 million. That's a huge jump from just about $29 million in the same period last year. What a difference a year makes. On a per share basis, diluted earnings were 99 cents compared to just 12 cents a year ago. That's almost an 8-fold increase, which is pretty remarkable. Looking at the first 6 months of the year, the picture is similar. Net income was over $334 million compared to around $121 million for the same period in 2024. So the trend of much higher profits is consistent. An interesting note here is the weighted average diluted shares outstanding. It dips slightly from over 242 million in 2024 to about 240 million in 2025. This means with fewer shares out there, their earnings per share can look even better. Their core revenue stream, natural gas, NGLs, and oil sales also saw a big boost. They reported over $666 million in sales for the quarter, up from about $478 million in the same quarter of 2024. That's a nearly 40% increase, showing they're selling more and getting better prices. On the cost side, transportation, gathering, processing, and compression expenses went up to over $304 million. This is a significant cost for them, and it increased because of higher NGL volumes and electricity costs. Overall, their total costs were about $554 million, which is higher than last year's $520 million, but with revenues shooting up much faster, their profits grew. This all led to over $302 million in income before taxes for the quarter, a massive jump from just $10 million last year. Their deferred income tax expense was also significant, over $70 million. This is a complex area, but it essentially means they are recognizing future tax implications from current operations. Now for the cash flow statement. This tells us how cash is moving in and out of the company. Cash from operations was great at over $666 million for the first 6 months of 2025, way up from about $480 million in the same period last year. This strong operational cash flow is key for a company like this. They invested nearly $13 million in new gas properties and equipment in the first half of 2025. This shows they are reinvesting in their business to find and produce more energy. On the financing side, they made big moves. They've repaid over $608 million of senior notes, a huge chunk of their debt. They also spent over $120 million buying back their own stock. This is a common way for companies to return value to shareholders. Let's look at their debt picture more closely in the notes to the financial statements. They now have $125 million in bank debt outstanding. This is a new category compared to last year. Crucially, they paid off their 4.875% senior notes due in 2025. This means a significant amount of debt is now gone. This payoff has dramatically changed their long-term debt structure. They now have about $1.2 billion in long-term debt, essentially just their 8.25 and 4.75% notes. This is a much healthier debt level than the nearly $1.7 billion they had at the end of 2024. They also have significant derivative assets of over $51 million. These are contracts to manage the risk of changing prices for natural gas oil and NGLs. They mention swaptions, which are basically options to enter into interest rate swaps, a bit complex, but it's about managing financial risks. Speaking of costs, stock-based compensation was around $11 million for the quarter. This is for their employees and executives, often paid in stock, which aligns their interests with shareholders. Now, let's look at how management explains all this. They're clearly pleased with the results. They highlight rising natural gas prices soaring to an average of $3.44 per thousand cubic feet in the quarter, up from $1.88 a year ago. That's almost double the price and a huge driver of their increased profits. Oil prices also saw a dip though. Their revenue from selling these commodities jumped by about 39% year over year. This is directly linked to those higher prices. Overall, their production sold on a heat equivalent basis is up slightly about 2%. So the profit surge is driven more by price than volume, which is typical when commodity prices rise sharply. Their realized price for natural gas before considering hedging was $2.92 per thousand cubic feet, up from $1.54 a year ago. That's strong performance showing good market capture. They point out that their transportation and processing costs are up, but this is partly because they're moving more NGLs, which is a good thing, a sign of increased product diversity. Depletion, depreciation, and amortization expenses are up slightly, mainly due to higher production volumes and a slightly higher depletion expense rate, a common accounting adjustment. And finally, their income tax expense jumped significantly, reflecting their much higher profits. So what's the story here? Range Resources is having a fantastic quarter driven by soaring natural gas prices. They've significantly paid down their debt and their operational cash flow is robust. They're also intelligently investing in their assets and returning capital to shareholders through buybacks and dividends. The increased marketing and financial activities show they're actively managing their business in a dynamic market. On the flip side, the rising costs for transportation and processing are something to keep an eye on, especially if commodity prices were to soften and production continues to grow. But for now, they seem to be executing their strategy very well. Alright, that's our breakdown of Range Resources' latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.